Well, good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for Wednesday, the 9th of October, 2024, just getting on about 4:15 in the afternoon. Look at the sea of red in all the currencies. Every main currency was down against the U.S. dollar. Gold down, silver down, platinum down, only silver up, the copper and the platinum and the gold down, silver up on the spread relationship. All the stock indices were up. Take a look at what happened in the Red Sea of the grain markets, beaten up and beaten up hard. Did I say grain? I meant energies. My brain's on right over here. And in the bonds and notes, what I'm looking at to be in this market is we just keep adding yield. My brain's going, how could you get all this going that way with the dollar rallying so strong, interest rates on a tear to the upside, and the stock market considers that good news and goes to all-time highs? I'll let you figure that one out because it is unusual. We know we're in earnings season. We know that I have been telling you I think the last quarter is going to be stellar for the market, and we just keep seeing brokerage firm upon brokerage firm coming out with targets on the S&P of the 6,000 or higher levels. So it's getting crowded, but that's what they think is going to happen. To a firm that I'm looking at, I haven't seen anybody say we're going to get a break into the end of the year, just the opposite. So that is important to take into account. In terms of news, we did get the FOMC minutes, and they show that the majority wanted to have a 50 basis point cut. There were a number that wanted to have only 25. There was a dissent, as we know. Michelle Bowman was a dissent, didn't want anything to happen. It turns out she's probably the right one, by the way. When we take a look at what the market focused on, it was labor, and they were concerned that the labor market was starting to weaken. The reports that have been coming in through August didn't look good, and they wanted to get ahead of that curve. Well, as it turns out, at least on one series of reports, the one we just had, you know the opposite. You added 254,000 jobs. You took the unemployment rate down to 4.1%. Get another report that it doesn't dissuade from those numbers. You got a real problem. Why would the Fed have to cut? You've got inflation falling. We get CPI tomorrow, and with that, we should take a look at this. We're going to get the CPI in the morning. They are looking for the CPI to lose 1/10 in both the headline and the core CPI, both down to 0.2% increase. We get jobless claims. They're looking for them at 230. This isn't a market that's soaring in jobless claims. So the labor market's staying in darn good shape. And inflation is falling. Why do you have to cut interest rates? I mean, I'm just asking the question, but if this data keeps coming in this way, I'm going to continue asking this question because as we get up right into the election and then past it into the next Fed meeting, tell me, if the jobs market stays strong, if inflation is falling, you really think you got to goose interest rates? That becomes an interesting question all by itself. All right. So as we come to the markets and we take a look at the S&P, obviously, if the market were to finish the week right here, you're at a new all-time high close. Market is on a tear. The market is stepping out of the sideways action and trying to break out to the upside. So now you've got a market that could be on its way. You flip-flopped everything to the point where you have higher lows, higher highs. So until Tuesday's low is taken out, I say the pros will buy the breaks in the market with, I think, stops under that number. I expect to see support against the 18-day average of closes, and resistance is right here. You're in this narrowness of the Bollinger Band. Do you whip traders around, get a number in CPI that comes in and causes the market to back off? I wish I could tell you, I don't know. But you're at your first real resistance. You've gone sideways for a while. You've built energy here if the market wants to take off. In the Dow, it's the same thing. You're overbought. You're coming right up to the top of the Bollinger Band. This is where I teach that if traders are long, this is the first spot that you take something off the table. Same thing in the S&P. Both are in identical position, along with the NASDAQ. All three, all overbought, all against their upper Bollinger Band, and all in uptrends. One market isn't, and it is If we come to the Dow here, lower low, higher high. Russell, trying to get over the 18-day average, didn't quite do it, all right? So let me come back to this just so that we understand what we've got. The NASDAQ and the S&P new highs. NASDAQ not at a new high, but moving higher. The Dow, yes, new highs. Okay, even though you're not completely trending per se with the higher low, higher high, but it's a new high, and you're still the dog of the group, the one that is sitting there. I'll catch up to you. Just don't worry about it. Reminds me of a John Wick movie. Yeah, did I fight good, John? Yeah, I'll see you another time. And he goes, no, you won't. And kaboom, that's where you're at. I still don't see why traders are buying that just yet, but they are. In the 10-year note, the lower you go, higher interest rates go. So you get up here into the September Fed meeting, Fed cuts, it never looks back. It doesn't look back. You just keep adding rate. The market's doing the Fed's job for it. It's going to slow the economy if these rates keep doing that. 5-year note, same thing. Now, are you down to key support area? Yeah, you're down to the 100-day average in the Bollinger Band in both, but you're embedded. So until you lose the embedded part, rallies in the market are going to continue to get sold. Lose that, and then the momentum changes. In the dollar, you're overbought into the 100-day average now and the Bollinger Band. Now, when I say you missed the 100-day average by 3 ticks, the number is 73.5. So what? You're basically there at your resistance. If you clear that, the 200-day average is your next resistance at 102.97, all right? But you are at a zone where I believe the professional trader is taking money off the table on the rally. In the euro, flip-flop to the downside. It's trying to hold this whole area of the 200 to 100 coming down and also not embedded. I think the pros have been coming out there. British pound still in the bearish trend. The market still acts like it might want to go to the lower Bollinger Band. It's fighting its way down. It's not an easy break in this market. It's got to be pushed down. Be a little concerned if you start getting over 131.14. It might signal a pause in this break in the market. In the Bitcoin, bearish. Lower highs, lower lows, resistance 62,646. Get over 64,760, you break the downtrend. But right now it's fully in place. And if the market wants to go the last leg, because I say last leg, you're already oversold with reading under 30, your 58.8 is the next support. On the energy market, well, I understand that President Biden and Prime Minister Netanyahu of Israel did have their conversation today. I have no idea what said, but if you read the excerpts from Bob Woodward's book about the relationship between Biden and Netanyahu, it couldn't be uglier. I mean, Biden calls him a liar. The cabinet's a liar. They don't stick to their word. I believe all that, by the way. And I'm highly critical of Biden. I believe Biden in this case. I think Netanyahu's an opportunist. I think that he stays in this position because, do you remember, before the war broke out, he was going to court. The question was he going to jail? And the war, now a year later, who remembers even what that case is about? The whole thing has changed. Now the big question is oil going to get hit or not hit? It's falling apart. It doesn't act like it is, but you just never know with these things. And I don't know what was said today. Was this just basically Israel saying, here's what we're going to do, and we expect you to be our ally and defend what you have to? Or was there giving up on some things? I don't know. I mentioned yesterday that Hezbollah has made a certain amount of concessions through the Parliament of Lebanon to Israel. They want to have talks based on it. However, they didn't agree to certain things on the preliminary. That doesn't mean that they can't talk and get a deal done. It would be a phenomenal win for Israel to not have to fight in Lebanon, get all the obedience of the treaty, not what Israel wants, of the original treaty in place, no firing at Israel because of what's going on in Gaza, game over. One of the huge proxies is out of the war. Then Israel takes on probably Iran or doesn't. I don't know which way this thing's going. They're certainly taking their time. And today I saw the defense minister, he said they'll have no idea, Iran, what's happening to them till it's happened. I believe that statement. Israel seems to have planted things a long time ago that go boom in your hand and your ear, and it's espionage at a level I've never seen. Lower low, higher high coming down. You'll see a movie about that all one day. But all the energy's getting hit here as they pull back into support areas. I told you I thought yesterday a major top is being made in that gas. I have not changed my opinion. You'd have to go back and take this out, and then I will say I'm wrong. But I do think a major top has been made, so I'm waiting for pull rounds in the market. If you're a trading view user and you want to get these indicators on your charts, it's simple. You go to our website, iraepstein.com. You go to the client resource area. You will see trading view indicators. Sign up there. We'll turn it on for you within the day. Typically, if you do it in the morning, we'll have it signed up for you that day. If you do it at night, we'll get you signed up the next business day. I'm Ira Epstein. You have yourself a good evening. You can also move your cursor to the top here. It'll take you to that area. You take care.